Hello guys, this was Eden. So welcome back. The last time we talked about Malaysian MSNR, the fundamentals, the key levels, the type we have and everything. So if you see video on YouTube, kindly subscribe and turn on post notification. And if you see this video on TikTok, do it to give us a follow and join our Telegram group. So anyway you are seeing this video, do it to join the Telegram channel. It's very important. There I share my trade bias, even before they play out my trading tips, free educational tips, and everything. I share them on my Telegram channel. So do it to join. Okay. So let's start, guys. So framing of bias is very important because you need to know where the market is going to and where the market is coming from. Yeah. So we use different time frame to do that. I'll be very brief in this video. So let me take it back. Okay, look at it. So from weekly, we move down to daily, and from daily, we move down to 4 hour, and from 4 hour, we move down to 1 hour or 30 minutes. That simply means if you see, for example, you see a key level, like an A-shaped key level on the weekly time frame. Let me mark it out. Forget the candle color, focus on the logic, please. So let's say this is an A-shaped key level on the weekly time frame. What do you need to do? Simply wait for market to tap into it. Tap into it, then what? Reject. Something like this. So after this rejection on the weekly time frame, now what do you do next? You move to what? The lower time frame, which is the daily time frame. And what are you looking for there? This is it. Very easy. Your liquidity sweep, your break of structure, your inducement, second break or no breaks at all, then your mitigation, then boom. You understand? So that is it. So upon knowing that, let's do the opposite, which is what? The V-shape, the V-shape key level. I've explained all this in my previous video, so I won't go deep into them, okay? If you have not watched the part 1, kindly go and watch the part 1. So this is it. This is the V-shape. All you need to do is to wait for market to tap into it, then reject. You understand? So after that rejection, you can now move to your lower time frame. If you're using the weekly, you can move to daily time frame to look for a break. You understand? If you're using the daily, you can move to 4 hour time frame. You can see them there. So that is it, guys. As easy as that. So let me show you guys one example. So checking from good, the weekly time frame, you can see that market tapped into this weekly key level. This is a V-shaped weekly key level. You understand? So like I said, if market taps into the key level in the weekly time frame, look at it here. You move to what? You move to daily time frame. So now let's move to daily time frame. So we are there. So on the daily time frame, what are you looking for? Let's position this thing way first. So on the daily time frame, what are we looking for? Simply a break of structure, liquidity sweep, and an inducement, right? So market gave us this break here in daily time frame. Remember, market tapped into this weekly. This is a weekly key level. So market tapped into it. And in the daily time frame, it gave us a break of structure. You understand? So that is it, guys. I thought this thing was on do not disturb. Alright, so that is it, guys. So you mark it out. So after I've marked out that break of structure, now mark out all the key levels that you know that market could react off from. So mark this one. That's a QML. This place here is a QML. You mark this one as well. There's another one here. So let's remove this one first. So you mark this one. We now have 3 levels, 3 POI that we can buy from. You understand? I'm using good as an example. Let's assume that it has not actually played that yet. You feel me? So inside these 3 key levels, which are you now going to use? Let's look for the strongest one. First thing first, you know that when markets do this, something like this, there's something we call plug and play. Credits to the fourth man. So he taught that plug and play stuff. He said, when you have a key level like this, understand? When you have a key level like this, a market taps into it and rejects. Pay attention, please. Reject like this. Then instead of market to go down, it simply what? Invalidates it with another candle. Then this zone is very strong. In fact, this zone you are seeing here will be more stronger than this zone here. Something like this. something like this, to be more stronger than this one. This type of invalidation without rejection. So these two, you cannot actually compare them. So this plug and play is stronger than this normal invalidation, okay? So if you check here well, you see the normal invalidation, you see the plug and play invalidation. How is it the plug and play invalidation? Look at it. This candle, let me shift it well. This candle here tapped into this invalidated key level and rejected before breaking, which simply means that zone is very, very strong, and it's stronger than this one. I never reject at all, but I just broke it. Very, very easy. You understand? So instead of now using this one, let's simply what? Use this one upon knowing that. You understand? So what do you do next? Simply wait for price again to tap into the key level. So market tapped into the key level using this candle. Then you now use this one as an inducement. It uses this particular candle as an inducement. You understand? So after that, you move to 4-hour time frame. You look for the same thing again. Liquidity sweep, break of structure, and inducement. You understand? So remember, this is the daily key level the market tapped into. So what are you now looking for in the 4-hour now? Break of structure. Then what? Inducement. No, liquidity sweep first. Liquidity sweep. Or you can use this place as your sweep. Anyway, just understand what you are doing. You understand? That's the main thing. Yeah, you can use it as your inducement. But me, what I saw here was this particular candle. Let me show you guys something. Let me zoom in. So we can see different POI here to take trades from. We can see this open close key level. We can see this other open close key level here. We can see this other one here. This invalidated open close key level. So when I checked, I saw that this place is closest to what? Inducement. Like it's the closest to inducement rather. You understand? Where's the inducement? This particular candle is the inducement. I didn't use this zone. So I used this zone instead as the inducement. Then I use this open close key level. So the main thing here is to just use the key level closest to liquidity. You understand? Or inducement. So this one is very, very valid, but the liquidity is very, very far from it. This one too is valid, and the liquidity is very, very close to it. So that's the reason why I'm using this one. So what do? You place your long position boss. You understand? Then you can put your SL below this place. Then target your normal arrow. Me, I love 1:3, 1:4, 1:5 a lot, or 1:7. You understand? All this high arrow, 1:16. Nah, I hardly, but sometimes I do them sharp. But if you are scared that, what if market comes to this other key level? What if market comes there? Then you can adjust your SL here. If you are scared, then take your normal 1:4 and leave the market. You understand? But if you are very, very strong and you believe the market will not come there, then you can adjust your SL here and leave the market with a 1:15 or 1:16 or anyone. You understand? So that was it, guys. That's how to build a bias and take your trade. So these are the entries that we have. And I will teach you guys one model that I use in lower time frame, which is what we call the SBI model. This is how it looks like. If you have not followed me, follow me, or you might not see me again. And if you have not subscribed too, kindly subscribe, okay? And do it to share too. So we have liquidity sweep, break of structure, inducement, another break again, then mitigation. So you can be using this model in your lower time frame for entries. You understand? Your liquidity sweep. It hardly fails, guys. It hardly fails. Then this is your inducement. Then this is your POI. You can use the other block or QML. Then boom, your long position boss. So same thing for the downtrend, guys. Same thing for the downtrend. So you can be using this model for your entries. Okay, very, very easy, guys. Very, very easy. So that is it. Just like what we did here, we use this model here. Liquidity sweep, break of structure, but not picture perfect though. Not picture perfect. Then what? Our key level entry, our inducements. Understand? But if you check here, in that model, the market broke structure twice, but this one market did not break structure twice. It came here, it rejected. So this one is what we call an engineer liquidity. This week here, it's called engineer liquidity since it did not break structure. But assuming it broke a structure, like the one I showed you guys just now, it will now be called an SBI model 1 or model A. You understand? That's SBI type A or type 1. So that is it. And that inducement, that low that caused that break of structure will now be called an inducement. But if that low did not break any structure, it will be called an engineer liquidity. Simple. So that is it, guys. So let me show you guys one more on Euro GBP. Okay. So I saw, let me cancel everything. This one is not picture perfect. Just pay attention. So this is a key level. The market invalidated and reclaimed. You understand? This is a key level that market invalidated and reclaimed, yeah? And before market reclaimed that level, it swept this inducement here, making that level very, very valid. You understand? So upon knowing that, you mark your break of structure, markets, then look for inducements that will validate that break of structure, which is this one here. Then you can take your trade. Very, very easy, guys. So these were the 2 trades I caught this week. Though I hit some SS in Jatetsu. He showed me shake this week. So that's it, guys. So you can target your 1-3, anything at all, 1-5 for anyone, then leave. The main thing there is what? Make sure your key level is fresh, unmitigated, and make sure there's an inducement there, and make sure you have a break of structure. Very, very easy. And make sure you know where you are going to. That's why we frame bias. So know where the monthly is going to, know where the weekly is going to, know where the daily is going to, know where it's coming from too. Don't just trade blindly, guys. So this is what I have for you guys today. Maybe next time I will explain more and expand it, you understand? So for now, peace out, guys. Do well to join our Telegram group for services like single mentorship, anyone or partnership. Kindly what? DM me. You can DM me on TikTok or join our Telegram. You see my contact there. You can DM me directly. So for now, peace out, guys.